Even while the pandemic is causing the economy to remain sluggish, there's a lot of talk about inflation lately. A big reason that inflation is the buzzword for the day is all the financial aid the government has been sending out. There was $3 trillion in the first stimulus package and then another 1.9 trillion in the second round. That means there's a lot of money floating around. Just look at the stock market. With crazy low interest rates, many have turned to stocks. But we're seeing signs of consumer overspending, which would help the economic recovery. However, all this money and spending is making its way into the economy through higher prices. If this causes higher inflation, stock prices could be impacted. So if the stock market has you worried, is there another investment idea? The answer is yes, and it could be real estate. So let's take a look. Why invest in real estate? Well, although not necessarily inflation proof, real estate is less reactive to inflation. While no one can guarantee investment returns, real estate often has a reliable return rate with a volatile economy. Historically, real estate has held its own during periods of inflation and often sees periods of high appreciation in response to inflation. Adding real estate to your portfolio can offset the risk of other investments like stocks or bonds. Real estate has generally been a solid investment even during times of turmoil. If you buy and hold real estate, you can achieve monthly cash flow from renters, but also appreciation. Like any investment, real estate can go up or down, but the overall trend is increasing prices. Even after times of turmoil, values generally increase, even if it takes a while, as it did after the housing crisis. It may seem like real estate and inflation aren't necessarily related. However, builders need materials to build, and if the price of materials increases, real estate prices naturally rise. That means that properties become less affordable, and in turn, that drives prices up again. Rising rent prices are where the money is if you're an investor. With higher interest rates, many people turn to renting rather than buying. If you own rental real estate, you're in a better position. If you have the right property and there's a high demand, the rent will increase along with inflation. Real estate is one investment that often hedges against inflation. On average, and over the long term, real estate prices generally outpace inflation by about 1%, and that can mean you're always one step ahead of inflation. Although it seems like a lot of work with a lot of decision making, there are many benefits of investing in real estate to hedge inflation. It's actually not as hard as it sounds to buy investment properties, and real estate investments have many advantages. You build equity through the appreciation of the property and pay down of the principal by the tenant. And you'll have regular cash flows with monthly income from an investment. You diversify your portfolio. So even if you own stocks, bonds, or mutual funds, my personal opinion is that you should diversify into investment real estate. If inflation takes over, the value of the dollar drops, and that will likely impact your stock investments. Real estate also has tax advantages. As a real estate investor, you may be able to write off certain expenses, including the interest you pay on the mortgage and depreciation. This lowers your tax liability and increases your profits. Inflation is a real risk for anyone, whether you're an investor or not. When the value of the dollar decreases, but your income doesn't increase, that's a problem. Investing in assets that hedge against inflation is the best way to protect yourself. For my portfolio, I hold stock, as you should know by now. However, I'm also balancing my portfolio with real estate. You should also know that I hold digital realty, which is a REIT, and that's one way you can buy real estate. But also, next week we close on an investment property near where I live, and I'm looking for more as I want to be prepared. So you too, be prepared. And for today, that's ChewDog Charts. Thank you.